Today, what we're going to do is talk about covered calls, right? We're going to work on this. We're going to basically do our normal. We kind of get our little update on how things went last week. Cash secure puts, we just talked about that a little bit. I'm going to hit this agenda. Basically, how do we use covered calls to make an income from your shares? You can have shares of your own, or you can buy shares just to use them for this strategy. So remember, we're talking about the wheel. Generally, the wheel can start with cash secure puts and then go around to covered calls, or you can just start straight with the calls and go into puts again. Wherever you want to start in the wheel is good. We're going to talk about which stocks will be great for this strategy as far as using a screener, and then we're going to talk about the 345 strategy at the end. Again, we also have our disclaimer. I'm not a financial professional, none of those things, financial advisor. I'm just here to offer strategy help and help us to win using the stock market. That's what I'm here to do. Don't forget the mission of the E2T membership and the E2T crew is to learn simplified strategies to help you create a full-time income in your trading with ease without spending all day in front of your screens. I'm really trying to get us where we're freeing ourselves, for lack of a better word, from being with the screen all day long, right? We don't want to be with our screens all day long. I want to go out of here and go to my sim so you can see how my trades looked from last week. So my AMC, I did a cash secure put. They're still going on. So they don't expire until the 17th of March. But there I have a 4 put and a 5 put, which means we don't want to be less than 4 or 5. Turns out AMC is still hovering above 5. So these puts are still doing well. The trade price here, $1.45. Current market price is $1.60. So if I close this right now, I would close it for a $15 loss. And the 5 put is also at a $25 loss. The only reason why these are is because the price of AMC is so close to the 5 put, and we still got a month away from expiration, right? So if price stays above 5, more time happens, that'll continue to decay it. If price goes up higher, that will decay it also. Remember, the two things that decay on the seller side is time and price action. So if price is moving away from your strike, then the premiums are decreasing, which is what we want. If time is elapsing, then you also want that. These are the two things that you want. BBAI, I'm not sure what made me deal with Big Bear AI. Maybe I added it just because we were looking at it. But I got a 4 put that's still going, but we're not above 4. But now this one this is a selling of a put. Well, I was thinking about how am I making money here if we're below the put price, but it may be these 100 shares. That may be it. Let's look at the Bed Bath & Beyond. This is the one we're really focused on. So Bed Bath & Beyond, I had 4 cash secure puts last week. I had them to expire this Friday, which was yesterday. And I had the 2.5 strike. Get my pen so everybody can see where I'm at. I had the 2.5 trade price, which that was my strike. That's how I got the trade price. So now this is the trade price as well as now my cost basis, right? So trade price, meaning this is how much I paid per share. But the current price of Bed Bath & Beyond is $1.81. So I'm upside down in money, right? You can tell here I've got 400 shares at this point because I had 4 cash secure puts. But now my 400 shares, I've lost $276 out of the $1,000 I had, right? So I paid for 400 shares times $2.50 a piece, or $250. Let me take out that decimal so we can see that. Yeah, I probably should do. Anyway, yeah, I had 4 contracts at $250. So I still could put that decimal back in there, because it's either way, this equals $1,000 that I paid for Bed Bath & Beyond shares. But currently, this is what I paid for them. But currently I have 400 shares that are worth $1.81. Right? They're no longer worth $2.50, which is how I'm now. So this is what $724 is what that's worth. So now I'm at a negative $276 as far as my shares go, because I was given the shares at the price that I had as my strike. That making sense, everybody? So my cost basis is $250. So now that I'm going to do covered calls, I need to look at that price or above for covered calls. Okay, I wanted to show you what came out of the Bed Bath & Beyond before I go into the slides of how are we managing, of how to manage or learning how to do covered calls. All righty, anybody got questions thus far? Okay, so I own 400 shares right now of Bed Bath & Beyond, because once the contracts expired below my strike, they basically put the 400 shares, because I have 4 contracts, they put those 400 shares into my account overnight. You look up one morning and there they are. Okay, they just put them there for you to use for your covered calls or for whatever you want to do with them after that. Now, the shares are yours to do with whatever you please, whether that's to sell them, sell your shares, take your loss, hold on to them, sell covered calls on them, wait till they rise up, whatever it is you're going to do. We're going to talk about doing covered calls. Now, you can do the covered calls based on things you buy, or covered calls on shares you already own. Let's say you already have positions in your account and you want to make money while you wait. You can also do covered calls. Okay, a covered call is when you own 100 shares of a stock, or you have a long call, you can sell a call against those shares for premiums. Now, we spent a lot of time before talking about using covered calls and leaps. And I'm not talking about that today. I'm not saying you shouldn't do them. And I'm saying it's a possibility that you could do them with the prices that things are now. You probably could buy a leap. Like I have a leap on SoFi, several leaps on SoFi. And I also have, I don't know if I still have, I think my 100 shares got called away already. So I have leaps, but no shares on SoFi. Y'all know my darling. Have to incorporate my darling, right? So when you own 100 shares of a stock or a long call, you can sell a call against those shares for premiums. This is a covered call. This is a 1-for-1 proposition. So every 100 shares means you can sell 1 covered call, right? It's not like I got 100 shares, so I can sell, 5 or 10 or 100 covered calls. No. It's a 1-for-1. 100 shares, 1 covered call. 200 shares, 2 covered calls. Yeah. Please see if I can record. I think I'm already recording, but I don't have control over it at this point. I think I probably would have to go out and back in.
It's recording.
It is recording though, yes. Okay, so selecting your strike when you're doing covered calls. You select the strike for the covered calls. To select the strike for the covered call, consider your cost basis for your strikes, which I kind of pointed that out a minute ago, that the cost basis I have for those Bed Bath & Beyond shares is $2.50. You can look on your, if you have shares of something already, the 100 shares or whatever in your account, you can look there at trade price. And I think if you're looking in TradeStation, it may be called something different, but it's still in this same area. Maybe it's the price or the cost, price of trade or cost of trade, something like that. It is in TradeStation. What is your cost basis for the shares that you already own? The reason you need to know this is because you're going to pick a strike at or above your cost basis in order to sell the call. You either got to pick, in my case, I got to pick either 250 or above as far as the cost basis. Otherwise, let's say I bought them for 250, but I pick a 2 strike and that gets breached and my shares get called away, then they're going to get called away at $2 a share. So I'm automatically saying I'm going to lose $50, on this whole get up if I do it that way. Okay, you want to pick a strike at or above your cost basis. If you'd like to keep your stock or keep your shares, then you want to select a strike with a delta of about 20 or 25. That basically means you've got a 75 to 80% chance that the price will not be at that strike at expiration. So there's some people who have, for example, you've had long-term shares, maybe you have Apple shares or AT&T or whatever it is, and you really want to hold on to them. You don't want to lose your shares. Then you want to pick a delta of 20 or 25, a little bit further away from your cost basis or even your current price. You definitely want to be up in your above current price and above your cost basis. But if you're doing this strategy for money, you're going to pick a little differently. This is an example of if you are wanting to keep your shares. If you want to keep your shares, I'm still using the Bed Bath & Beyond example. I've gone out 2 weeks because 1 week really only had a little bit of shares. So I went out 2 weeks from now. Looking at the delta, we've got either the 20, 20, the 22, 20, or 16 delta, depending on which ones you're looking at. And then you've got the premiums you're going to collect based on those deltas. Notice over to the right, these are the strikes. At the 3.5 strike, you've got the 3.5 strike is where you're collecting $10 in premiums. At the 4 strike, I would collect $9 in premiums. This is if I was trying to hold on to the Bed Bath & Beyond shares. If I had shares of something I really wanted to keep, then you would pick based on these deltas over here. Right? If I was just doing this for income though, let me see. I want to show, I don't know if that slide is where it goes. Oh, yeah. Here we go. This is fine. So this basically shows what you would do to pick. If you pick the 3.5 strike, right? Selling the 3.5, I just selected one of the ones we picked. Remember, my cost basis is 250. So I'm selling these at a 350 strike. You're selling a call. And I'm going to collect $10 in premiums when I do this. Of course, over here, I'm only going to pick 4 if I want, or 1, 2, 3, or 4. I can't do any more than the number of shares I have, and I have 400 shares. So you could spread it out. Maybe you do one Bed Bath & Beyond 1 week at a strike. Then you do a subsequent week at the same strike or a different strike, or you do 2 and 2. I mean, it's up to you how you split them up. Remember, 100 shares is 1 covered call. So you can break these out how you want to. That's what I would do sometimes with my SoFi leaps or my SoFi shares even, I would do 1 covered call at 1 price, and I would do maybe another covered call at a higher price, but later or further away in time. So you don't have to do them all at once. You can break them up. $250. The cost basis for Bed Bath & Beyond is $250. I got put the shares based on our cash secure puts from 2 weeks ago. Okay. But if you're trading this as a strategy for the income and you're okay with being assigned, you know, if you were doing like with the Bed Bath & Beyond, you're doing it as a part of a strategy and you're okay with being assigned, then you can select a strike 1 or 2 above the current price. You'll get better premiums this way. Okay, so this means you're not looking for a delta of 20 anymore. You're looking for, you know, a delta of 40 or whatever else. So now remember, my cost basis was 2.5 or is 2.5. If you pick a 2 strike, which you can, you just are going to put more collateral on the line. Because if your cost basis is $2.50 and you get a strike of $2, the broker is going to block up that other $50. Okay, so or you can just go with even to what your cost basis is. This means I'm going to take in $14 of premiums, but if the price goes up above the 2.5, then I'm going to release those shares at $2.50 each, which is what I bought them for. So that's not necessarily a problem. And I'm going to collect $14 in premiums. But remember, current price of Bed Bath & Beyond is currently $1.81. So the 2.5 may or may not happen because price is now lower and 2.5 is equal to my cost basis. So you want to be at or above your cost basis. I can go up one more and go to the 3 strike and then collect $11 in premium. Okay. Really going to come down to what it is you're trying to do with the strategy. Are you doing the Bed Bath & Beyond for as much income as possible? Right? So I would get at or above. I wouldn't necessarily go below, because if the 2 gets breached, like I said, if the 2 gets breached at expiration, by expiration or at expiration really, then you're going to be selling the shares for $2 when you paid $2.50. So you want to, in my opinion, get at least the $2.50 because that's what you paid for. Questions, anybody? Nope. Okay, let's press on. Here's what this looks like. Bed Bath & Beyond. See, over here, I did just two contracts, even though I own 400 shares. I'm at the 3 strike, which my cost basis is $2.50, and I'm going to collect $11 per contract. And I went out 2 weeks because the 1 week premium was like $6, right? It wasn't a lot. So I went out 2 weeks. Basically, I'm saying I'm going to lend my 200 shares to the market for 2 weeks at a cost of $11 per contract. That's how much I'm going to charge whoever's on the other side of this trade. Okay, how do we exit covered calls? How do we exit covered calls? If you're selling covered calls for income, then you can wait until the premium has matured to over 70%, then buy the close. You could, wait till it gets 70% of your call and then close it by buying back at whatever premium it is. Or you can wait until it's fully matured and you can keep the entire premium. You wait till it matures all the way. If it matures and the price is below that call, then you keep all the money and your shares. If it matures and the price is above your strike, then you still keep the premium and you get the money that it's worth. Okay, so if I sold the 3 strike, right, and I collected $11 in premiums, I'm going to keep that money. And if it gets breached, if the price goes over $3, they're going to pay me $3 per share. Remember, I only paid $250. They're going to pay me $3 per share. So at the end of that trade, for each set of 100, I'm going to get $300 back. I only paid $250. I'm getting $300. So the difference goes in my pocket. If the covered call strike is breached at expiration, the shares will be called away, and you'll be given the strike price times 100 for your contract, for each contract you have. There's nothing you need to do. Believe me, when it's all over, the broker gonna come get their stuff and say, let's get you to whosoever they belong to. Because just like you get put the shares in your box, that's because somebody was buying, selling, and the trade didn't go your way, so you got put the shares. The same thing happens here. If you've said, I'm willing to sell my call shares or my shares at $3 and it expires and it's past $3, then they're going to say, okay, great, get those over. Thank you. Thank you for your service. And they'll take the shares and give you your money. Nothing for you to do. It happens all on its own. If you're selling covered calls, but you want to keep your shares, I got Apple shares and I'm trying to hold on to them. Well, you can close the covered call at any time by buying to close the trade. You're going to have to pay whatever premium the contract is worth at the time, though. Okay. So if you say, I really want to keep my shares, you got to buy to close. Or you can roll. You can roll a covered call also. You can roll it. You create a rolling order, which basically allows you to roll it out in time and or roll it up to a higher strike. So you can actually keep the same expiration date and roll it up to a higher strike, right? But you may have to pay something, but you shouldn't have to pay the same thing as you would pay if you just closed it out. Or you can roll it out in time. You may have to pay, you may not. It really is going to depend on which you pick going forward, if you're trying to hold on to your shares. If the price moves past your covered call strike, you can just close the trade for a loss and enter a higher strike. A rolling is just that. When you roll something, you're basically closing and reopening, but you're closing all at one time. You're doing the whole motion. You're doing one motion at a time, but you really are just closing your current trade and opening another one, but you're doing it all in one motion. You're just not closing, then separately opening again. You're saying, I'll roll it and do it all at one time. That's really all a roll is. It's closing what you got and opening something different. Let's look at where we can find these. Anybody got any questions so far while I take us to bar chart? I do like that covered calls and cash secure puts are pretty straightforward. They're really not neither one of them is very involved strategies. It's just the decision as to what you want to use, what kind of money you want to put on the line and what you want to use money-wise and which stock you want to use. So I went to bar chart, which, barchart.com is free. We talked about that 2 weeks ago. I went under options and I picked, come on, take me back, covered calls. Under options, pick covered calls. This is a free screener. It'll basically give you covered calls, cash secure puts, whichever you're looking for. So these are the ones that are listed here. I know this is probably an eye chart, especially if you're looking on your phone. They give you, the stock, the current price or the price when this was run. They tell you which strike you should use. They give you expirations. And I don't know if we can change, if you have a membership or whatever with them, you can change this to weekly expirations if you'd want. So you can see ones that you don't have to wait, go out a month if you don't want to. But we're looking at it. I just want you to see that they're here. And there may be some other screeners like FinViz may offer something like this. I don't know if they do covered calls or a list of things like this to do. But bar chart, you just pick it over here to the left and it's yours. They also have credit spreads, bear call credit spreads, and put credit spreads over here. They do have some suggestions for those too. If you're one who doesn't just want to do SPX, you can look at, they have some screeners here for you to look at there too. Again, all that stuff is free. The first page is free. You don't get to adjust the screener at all. You just get what they give you and see if anything there, suits your fancy. So looking here, you see SOUN, we looked at, I'm just bringing up ones that are, not too expensive. Carvana is here, 1137. The Sound, SOUN, is SoundHound AI. I think we talked about them last week. They're a week buy, it says over here. So their SOUN is that one. And currently, SOUN, they're suggesting, the price is $4. They're suggesting a 5 strike, and you're going to collect 35 cents between now and March. I'm looking at Sound right here, SOUN. Okay, they're suggesting a 5 strike. March 17th, you're going to collect $35 as a covered call between now and you're going to collect the $35 immediately, and it hopefully will deteriorate as time passes, and you may be able to close it early if you'd like. Go from there. GNS, not sure who they are. Let's see who's GNS. $5.85. GNS is Genius Group Limited. They're a strong buy. Not sure what they do. I'd have to scroll a little bit. Genius Group is an entrepreneur, ed tech, and education group with a mission to disrupt the current education model with a student-centered lifelong learning curriculum. They're based in Singapore. That's the GNS is that one. Okay, that's this one. Oh, for $5.85 is the price of their shares. They're offering $70 in premiums between now and next month. So what you could do, if you don't already own these shares and you want to use them, what you do is go buy the shares for, $4 or whatever current price happens to be. If we're looking at Imagine, this next one here, Imagine you go buy, 100 shares. Let me get my pen back. I want to look at this. I think it's Imagine. I don't know if that's the name of the company, actually. No, I don't want to do that. So Imagine you buy 100 shares times the $4.18. So you're going to pay $418 for your 100 shares. If you decide, I like this particular guy, I'm going to go buy the shares for $4.18 a piece. And then you do your covered call at $5 and collect your $50 in premiums. Okay, so you paid $418, you can subtract your $50 for them because you're going to get that money right back. So you really only paid $368 for 100 shares of Imagine or Imagine. And you buy the shares and then use them for covered calls. If they get called away, if you use a 5 strike and they get called away, then you're going to make $500 and you only paid the $418. And you got $50, right? So you $500 minus the $418 plus this. So you're actually, should we subtract our 50 or add our 50? You subtracted that 50.
Subtract.
Yep. Yes, the doctor is speaking. Yeah, you're going to subtract that because that's what you took in. So you got $500 minus the $368. Okay. Who's got questions? We got
Can you do this with a cash?
Go ahead.
Can you do this with a cash account?
You can do cash secure puts in a cash account. I don't believe you can do covered calls in a cash account.
Oh, okay.
I don't believe you can. You can do cash secure puts because those are just secured with your money. But covered calls, I don't believe you can. Look at here, though. We got Fingerhut, which is currently $2. You're going to collect $17 in premium. So you're going to spend $200, collect $17 in premium. So you're going to spend $187. They say do a $250 strike. So if you, okay, so you're going to pay $200. Oh, come on. You're going to pay $200, but you're going to collect $17, which means you're only paying $183, right? And if you do the $250 strike, you're going to get $250 if you get breached after your time up. And the difference between these two would be $67. I almost said 70, but let me be specific versus general. $67 of profit at the end of that. If you bought the Fingerhut shares for $2, you collected the $17 in premiums. That means you really only paid $183 for the stocks. And then for the shares, and then you did a 2.5 strike. If that gets breached by expiration, then you sell them for $250, which means you keep $67 of profit from this whole experience. This whole situation means you kept $67 in profit. Now, I know when we compare this to what we do with SPX, you're like, I can make $67 off FPX in one day. And you can, yes. With a little bit of extra watching and doing and maneuvering and worrying and such and such, right? You can also lose the $67 plus some on SPX. I'm not suggesting these things as replacements per se for what you're doing with SPX. I'm suggesting them as additions, or they can be replacements. It really comes down to what your current life situation is allowing for. If your mental abilities cannot withstand another max loss, it's not just your money, it could also be your emotions, then maybe we look at something different. To give your nervous system, I got Gigi on the line. My psychologist is here. Psychotherapist, I think she said she is. She's on the line. And she said, you have to watch your nervous system. Okay? Any questions so far? Bed Bath & Beyond is also here. Actually, not a bad situation. Bed Bath & Beyond, the stock shares are $181. Going to be at 1.81 times the 100 shares is $181. You're going to collect $31 in premium, which means 100 shares of it is only going to cost you $150, right? If you use the 2 strike that they suggest, you're going to make $200. If you get breached, you can subtract the $150 that you paid for them, and you're going to end up with $50 of profit at the end of this whole experience. And you would have only had to put really $150 on the line. Put $150 on the line to make $50. That's a what, 33% return on your money?
It's over there in the column potential return. See?
Oh, there we go. 33% potential return is here. Más preguntas? All righty, let's go look at some. I want to go through we looked at them on bar chart. We can use the Bed Bath & Beyond as or we can use Finger Hut. Which one y'all want to use? I like the Bed Bath & Beyond. Y'all like that one or Finger Hut?
Bed Bath & Beyond.
There we go. Okay, cooly high. Let's go to Bed Bath & Beyond. In my case, I already own some shares, so I'm just going to walk through the covered call part. But let's go back. Maybe we can, I can't do it in Sim. I think I want to go and do it in On Demand. In On Demand. Bed Bath & Beyond offered the best return on the money. When we look here, oh, well, there's Rita, I'm not sure who they are, but they cost more money to get into. Sound offers a 36% return on your money at $400. Genius offers 35% return. Imagine Pizza Hut, 35%, not Pizza Hut, Finger Hut. I keep saying Pizza Hut. Finger Hut offers a 35% return, and Bed Bath & Beyond offered 33% return. All right, Gigi, thanks for joining us. I'll see you later. See you later. Come on, taking a long time, Thinkorswim. On Demand, no. Oh, my computer's going slow. Oh, somebody is at my door. Who could that possibly be? Y'all hold on. Oh, they want to sell solar. Not today. Not today. I'm back. Bed Bath & Beyond. And that's where I needed to be able to pause the video. I could not. So let's look at, oh, they just fell down below $2 on Friday around this time. Oh no, let's go here. Let's go to maybe 3 o'clock. Maybe we can buy us some at 3 o'clock and then do us a covered call. These are, they were $2 right now. I want us to be less than $2. They were less than $2 back here. What time was this? More like 10 o'clock. That looks like 10 o'clock. Still need to be a little lower. That low is 208. Why did I feel like it was lower through the day? Did I miss something? And when did it get to be $1.81? Maybe that was the time that bar chart pulled the numbers. 175 was Friday in the afternoon. I believe this was Friday. Oh, you know what? On demand has me looking at a previous, I set the date on Bed Bath & Beyond. I need Friday's date. Let's see if we can do on demand maybe for Thursday. Yep, you set the date here. You can't go back and on demand, but so far, because they don't let you go back all the way. All the way. Going all the way. Y'all know anything about that? What time is it? Is this a daily chart? No, it's 10 minutes. Oh, okay, we can buy them here. Alrighty, so we're $1.86 right now, right? We can trade, which means, oh, sorry, we can buy. We want to buy 100 shares. So I went here. You can buy 100 shares at a lot of different places on here. You can pick the bid and ask right here, or you can, I think, you select the price. You can click in the chart. I think there's so many different places you can buy shares. Most of us trade options, so a lot of us forget how to buy shares because we don't do a lot of buying of shares. But when you click it, you automatically are buying 100 shares at $1.87 in this case because I'm on Thursday's time, right? I couldn't go back any further than Thursday. So I bought my shares at $1.87 a piece. Bought me some shares for $1.87. All right. Then let's go look. Now that we have 100 shares, we got to monitor. I think because I'm in sim. Oh, I'm in on demand, so that's different. I bought them at, see my trade price here is $1.87. Right? Current price is going up just a taste. I'm 50 cents in. I'm making money by the minute. Already. That's one good thing about shares is it is a 1-for-1. You don't need the price to move a lot. Whatever it's worth at the time is what it's worth. So if I wanted to do a covered call, we're still on Bed Bath & Beyond. Just keep me where we're going. If I wanted to do, I can't do the 17th because that was yesterday. I'd rather do another subsequent week. Let's say the 24th, and we're looking at, we bought them for $1.87. If we're looking at a covered call for $2, I'm on February 24th, which is next Friday. I'm looking for the $2 call, which is going to pay me $18, right? So I paid $1.87. So let's say I paid $187. I'm going to collect $18 in premiums. So really what I've paid is $116. I'm going to pay, by the time it's all over, if I subtract this 18, I'm going to pay $169. I'm picking the 2 strike. So because I'm picking the 2 strike, if I get breached as a covered call, I'm going to collect $200. Minus the $169 that I paid for them means I'm going to profit $31 within the week. Each week I'm going to be, if I were to get breached at the $2, I'm going to profit $31. If the stock stays below $2, then I'm going to keep my $18 and do it again next week. Do it again for a subsequent week. Make sense? I'll keep my $18 and then the next time I'll do it again for the next week for whatever amount of money the next week is, and on and on and on. The bad part, it could be that the stock price of Bed Bath & Beyond continues to go down. So where I've paid $1.87 for shares, but they maybe get down to $1.50. That means they're now worth less than I paid for them. But you can continue to sell covered calls. right, against them and continue to draw in profits. Let's look at what would be, if I just did 1 week, I was looking at collecting $19. If I went out 2 weeks to March 3rd, I would be collecting for a 2 strike, I would be collecting $27. So $8 more for waiting another week. And you can go, you know, what you pick, what date you pick is really up to you. But let's go back to February 24th so we can go through the motions. I'm picking the 2 strike, right? The $19 here. 1 contract because I only have 100 shares. The 2 strike. $19 is what I'm collecting. Yes, you can adjust it up a little bit if you want, maybe get a $20 or $21, $22. You can adjust it a bit. It's going to depend on price. Confirm and send. You kind of want to enter the covered call as price, of course, as price is approaching that strike. So you want price to be going up when you enter your covered call, because that way you can get a little bit better premiums. If price is falling, that means the premiums at your strike are going lower and lower, but you want to be able to get as much in premiums as you can. You also can think about, again, if you are buying them, if you're doing the covered call strategy just for income and you pick a strike above your cost basis, then you don't necessarily have to be as concerned about picking your strike above a resistance area. Now, if you are trying to keep the stock to continue to run the process, or just to keep the stock because it's yours, then you may want to consider getting at or above some resistance, you know, a weekly or a weekly daily resistance, because you're only going to go out a week. You may want to look at the weekly resistance. And then you can exit your trade whenever you want. You can exit whenever you want. So what we have now, I have 100 shares of Bed Bath & Beyond. I paid $1.87 for them. Right? I paid $1.87 for them. I also sold a covered call and I received $19 for them, for that. Whenever you're ready, you could always go to pick this covered call, right click it. You can create your closing order, which means you're going to buy it back. At this point, you're going to buy it for $20, even though you only took in 19. Or you can go down here and create a rolling order. Create the rolling order. I'm going to select it. Basically, it's saying I've got the one that I'm basically buying back is the underneath the bottom. I'm buying back this particular strike. And it automatically took me out a week. It automatically gave me another week here, this March 3rd. It kept the same strike, but gave me another week of time. But what if I decide I really would rather roll it up to a 2.5? Let's say I think I need to roll it up to a higher strike. Okay, let me put it back on 2 because I want to show you something. At this point, when I have it on 2, the price says I'm going to receive $8 more in money. This is a credit. So if I just roll it, I'm going to get $8 more. If I keep the same strike and I roll it out 1 week, I'm going to collect $8. If I change this strike, though, to 250, keep the same forward date, but I change the strike to 250, I'm going to pay $1. Notice it now says debit $1. If I roll up to a higher strike, the premiums aren't the same there. I roll this up to a 3, I'm now paying $5 debit. Debit means I'm going to pay. That means this whole trade, I'm going to close the one I have, open up a new one a week later, 1 whole point up higher than where I was. You can also leave it at the 2 strike and go forward, you know, whatever date. You can pick, you can change the date or you can change the strike. If I go out 2 weeks from my current expiration, I'm going to take in $12 more. Or you can roll forward and roll up in price. You can go out in time and go up in the price. In that case, that one worked out to be no extra money. If I move forward to March the 3rd, 1 extra week, and I moved up to 2.5, actually, I'm going to collect $1 in money. But I've now got more room in my covered call, and I've got another week of time. You can roll out as far as you want, and you can roll up to wherever you want. Just remember, you're either going to collect money or you're going to pay some.
But if you get breached at that higher strike, you collect more money, right? I mean,
you would collect more money. Yeah. If you get breached at 250, now you're selling, I mean, at 250 or 3, then you're collecting. Remember, I paid 187. That's a good point. I paid 187 for them, right? And then I collected the $19 initially in premium. I think it was 187. Yeah. So then I was at what, 169? I think I said 160, 168. 168. Okay. And if I sell them then later for $250 minus the 168 I paid, then I'm going to keep $92, $82. 210, 15, yeah, $82. Versus the other one, which was 60 something, I think. Good thing about the covered calls and the cash secure puts, you know, at the end of the day, you either get some shares, you get shares and money. Even if you lose your shares, you get the money. There's an exchange, which is a little bit different than our SPX. That's why when you do a cash settle, then what you gain or lose is just money. You don't gain any shares or lose any shares. You gain or lose the money. Sometimes that's painful because sometimes you feel like as an individual, I'm fine with paying money for something if I'm getting something in return. You're getting something in return. When there's no exchange, you're like, eh. Okay. Anybody got questions on that? Anybody got any any covered calls questions?
you can grow a small account with these little small moves.
You could.
Yeah.
Again, it would be, you know, the slower pace, but also, you know, slower growth. You trade off higher risk, higher gains and returns and losses. Lower risk means slower returns and wins and losses too. So it's the amount of risk that's involved is generally the pace of the growth or not so much of your account. I think I've been through all of these slides. We looked at some already. Now we're ready to move. If everybody's ready, we can transition into talking about the 345 strategy. Are you ready? Okay. So the clarification of the 345 strategy is that we're looking at a candle. I'm on the 15-minute chart here that you're just starting at the 15-minute chart. Stefan said he's ready. We're starting at the 15-minute chart, right? This is the 330 candle. Why the 330 candle? Because it closes at 345. The 330 candle closes at 345. That's why we're looking at the 330 candle. We're measuring the top minus the bottom, whether it's red or green, doesn't really matter. What is the difference between the top and the bottom? So the top minus the bottom must be greater than the ATR for that same time frame, right? I had to sneeze. So you have the open. This is looking at it on Thinkorswim. On TradingView, they do this for you, but on Thinkorswim, they don't. But you're taking this open price and close price. Before we were looking at the high and low. You know, the high and low here is a difference of about 6 and some change, almost 7. But the difference between the open and the close is more like 6. There's a difference between those two. In this case, they either would work, but I want to make sure that we're fine-tuning it enough to see what we're talking about. Okay, so the difference between the open and close, 41.35.26 minus 41.29.3 gives us about 6. The ATR down here for this same 15-minute time frame is 5.8. So in this case, this would potentially meet the strategy. The thought is that if the ATR is smaller than the top to bottom of the candle, then the price should close between them, or at least between the range of the strikes, right? Because in this case, you'll see that it didn't close between them, but it closed up here somewhere. But it still was below the 41.40, which is what it been. So the top of this candle was 40. This up here, the high is 41.36. And the low is 41.29. There's no wick down there. So you would have picked a 41.40, 45 CCS and or a 41.20.25 PCS. Not a lot of money at the bottom because the price is up here at the top and we're only 15 minutes from expiration. What we've looked at too is it may be best when you're at the 15-minute time frame to go with the trend of that window of time. Like in this case, you got the trend is going up. It probably would make more sense to get the PCS, but the PCS, there may not be as much money here. So you need to, think of that for yourself. One thing Saida does is Saida checks the trend of the day. So if it's a green day, she goes with the PCS. And if it's a red day, she goes with the CCS. Okay, if she's on here, Saida, you here? She said she was going to be late today. She's not here yet. So I was gonna say, I'm not sure she was still doing that, but I'm not, I wanted to hear how that's still been working out for her. Do we have questions on this page yet? I'm gonna change slides. Here is the writing of the steps. Here's the write-up of the steps. Maybe we do a print screen. We can maybe put this in the, there we go. So you want to look at the 3:30 candle because it closes at 3:45. Determine if the top to bottom difference is greater than the 15-minute ATR. If the top to bottom criteria is not met, then you want to reduce to the 10-minute time frame and repeat step 1. So this, you start at that 15-minute mark and you go down in time until the criteria is met. For the most safety, by the way. Keep reducing the time until the criteria is met. Step 3, look at the trend or direction for the day and or for power hour. Because the power hour trend may be going one way, the day trend may be going something different, but you want to still look at the things you would normally look at. This is not done in absence of you checking, is the price coming down to a strong support area or is it going up to a strong resistance? You want to keep those things in mind too. So we're not just trading this in absence of all the other stuff that we know. Seems that one side entry works best at this time. Like I said, that if you see something and you decide we're going up during this power hour, just doing a PCS feels like it's it seems to work out better because it seems like that last 10 to 15 minutes, if it's going, it seems like it gets on a bigger horse or gets hopped from a horse to a train and runs even more. So you do want to go with the trend that it's been on for a minute. Select the strikes one step above and or below the candle. Iron condors can work at this time, but you just want to be careful because sometimes it feels like the one side is a better move if you're doing it at 345. As you get closer to 4 o'clock, you got a little more room as far as you go with iron condors. Who's got a question? Nobody? Okay. Let's look at some then. Let's take a look. We're still in on demand. We're looking at SPX. See which days. I know it, the strategy, the candle I just took from, the candle I just used came from Monday. Let me see, what time is this? Nope, not that early in the day. 3:45. Nope, I need 15:45.
You're looking at Bed Bath and Beyond.
Okay, thank you. Trying to look at SPX. And let me change the date again to go to where I want to go. I'm gonna pause here. This is the 3:30 candle that we were just looking at in that graphic. This is that candle. But let's look and see, and I was on the 15-minute. Let me switch this to the 15-minute chart so you can see exactly what we're looking at. Because I also want to show the moving forward of time as far as whittling down the time frames. So in this case, if you're looking right here, a few things are evident here. There's some things that we can see here. First of all, we see there's a pretty strong resistance right here at 41.37. It's a pretty strong resistance at 41.37. That's the high of the day, right? So we could say, okay, we know 41.40 is even above that. So that in itself could be some, I almost don't want to say could give you some comfort, because that doesn't, these days, that kind of doesn't seem to matter that it gives you comfort. Looks like this is about 41.25 is the support right here. So this is the 15-minute chart. We will be looking at this 3:30 candle right here to see, does it meet the criteria? Let's say that it didn't meet the criteria, right? And we wanted to go forward. I'm going to change this to the 10-minute chart, and I'm going to let this now move forward. Okay, so if we had decided we were going to go with that, we would have done 41.40, 41.25, which 41.25 now is a different spot, seeing that I've moved things around. And we're at 46. The time is just running on. Actually, it's 41, maybe 26 or something like that. Change this to the 10 minutes. Yep. So now you'd be looking at this next candle to see how does it close at 15 or at 3:50. You're looking at, this is the 340 candle because it closes at 350. You're always looking at the next to the last candle. And this one is going to be next to, if it runs from 340 to 350, then this is the next to the last candle for the day. I'm going to pause us here. So that candle, y'all see, it looked like not a lot happened on this 10-minute candle right here, huh? So that definitely wouldn't meet the criteria. You have the 10-minute ATR down here. 10-minute ATR is $4. It's 4.48. This candle barely was open at all. Open and close here is the same spot basically on this 340 candle.
A doji, right?
Yep. So if that didn't work, we would switch then to the 5-minute window of time. Now, this is getting you right into scary zone for many people. You know, Jamie says that we're daredevils. This would be if the 345 one didn't go, you're still whittling down the time until you get to where the criteria is met. Now we were looking at, remember, we were looking at 4140, which is up here, initially at the 315, 345 mark, and we were looking at 4125. So it looks a whole lot better now that you widen it out, like, oh, there was room. That's a whole 15-minute mark. We're down to 5 minutes, so you can feel a level of, again, you don't really want to get too comfortable because we didn't just meet Penelope, and we know what she's capable of. But we're running on now, let the time run on. If you would have done the 345, 4140, or 4125, and or, because you could have done them both, then you're just letting the time pass, right? We're at 9 minutes left. It's 3:51 at this time up here, scary zone. But you've only been in this trade for, 6 minutes so far. 6 minutes, Dougie Fresh. This right here would scare you. It would me. What is going on? Where are you going? No. And we're on the 5-minute chart. So now we're looking at our candle patterns too. And these two candles right here let you know that it was going to turn around, or it was definitely trying to turn around, because you got the doji, which means there was indecision. And then this next one is the upside down looking hammer, which basically will show you this long wick down here says, I'm going the other way. So that's doing just that. We're at 353. Right? So I'm waiting for us to get to the 55 mark so we can check this. This is the candle we're looking at, though. This candle that's doing this right here. This is the candle we want. So it's probably going to meet our criteria, but we're waiting till the candle closes so we can see if it actually meets the criteria of open minus close, which right now open minus close is about 3 and some change. Right? And there we go. So this candle here, which is the 350 candle, that's because it goes from 350 to 355. Open and close up here is about 4 points, and our ATR is also 4. So this 5-minute candle could also be what you do. And you're looking to say, okay, I want to go outside of the top of this candle, which still puts you at 4140. And I want to go under the bottom of this candle, which actually now brings you to 4130. Now you're in between, you're at the 5-minute mark, right? If you're going to do an iron condor, this would be your 2 places. Let's see what we can do here. Close up. Let's see what we're looking at for premiums. 4140 CCS. Nope, got to do a vertical. 4140 CCS, there's not any money there currently. What did we say? 4130 was the bottom, and there is $80 there right now. Gonna confirm and send. Even if that was the $80, that's enough for the trade to be worth it. We look for over 10%, right? Okay, let's turn it back on. We collected $80. Actually, we collected 87, but you know, On Demand and Sim, they're very liberal with their money over here. Very liberal with their money. I didn't look back at the 41.25 at the 3:45 mark. We could probably go back and look there to see. We're still closing up the day. If the 5 minutes didn't work and you felt like that wasn't enough, you can then take your time frame down even smaller. Go to 4 minutes, 3 minutes, 2 minutes, right? You could go down. Again, this is fast. You're not, this is, so you don't, it's scarier when you get close, but then it's scarier, but then it's also not, because the time is very, very limited, but it can still be scarier. It's all scary. SPX as a whole is scary. 41.30 is here. 41.40 is up higher to the top. And this is still dancing around between those two with the current price, 41.33. We're a minute and a half, a minute and some change away from the end of the day. And I think the price ends up closing at 41.36 or 37 is where it ends up closing. I want to take us back to the 45 mark though. We're gonna go back here in a second. Okay, so price closed at 41.36 and 96 cents, or 41.37.40. I think it definitely runs a few more seconds past the bell, just in case y'all are wondering. I think because I've seen the price end at one place and then jump right at the last second, or the 10 seconds following. So this is where price ended, 41.37, and we would have had the 41.40. In this case, we only had the 41.30 because that's the one where the premium was. Premiums were for us at the time we got it, 41.30, which we saw here was also some support. Let's go back to, I want to go look at the price, the premiums at 3:45. I think we decided that 41.40 and 41.25 were a place to be at that time, right? Let's look at what are the premiums here. At 41.25, the premiums are $15. This is the 41.25, and at 41.40, the premiums were $65. So put together, you still end up with the $80 if you were going to do an iron condor at that time. Let's look at another day. Anybody got any questions?
Who's tried this in their live account?
Saida, me.
Oh,
Definitely the two of us. I'm not sure about anybody else. I know me and Saida have.
Oh, okay.
Where are we? Come on. Here we go. Yep, all the days except for, what was that, Thursday? Didn't wait on Thursday. And got what Ken Branson would say, your face snatched off. Not that you could have done anything about it, except for watch the fact that, but getting in later would have showed a different trend that happened it had been going down for so long. Yeah, well, I'll go to Thursday here in a minute, but So this is Tuesday, looking at the 15-minute chart, starting there. This is the 3:30 candle. Open to close is about 4 points. Open to close is about 4 points. Well, the current ATR is 9.7. 9.67 is down here, the ATR. So this is the 15-minute candle. Let's turn it on so that way we can see what it actually is doing. At this point, it's not meeting the criteria. Unless this candle gets really big, it probably won't meet the criteria. But the other thing you can look at is you're now in power hour. We've been going up since, down this time. This time is weird because this is 9, 10, 11. So since about 11:45, it's been going up. Right, so you can say, okay, this has pretty much been an up time, so I could get underneath some support, maybe under 41.34, maybe look at 41.30, because you look at this support, which is about 41.30 below that, or 41.25. Now this does not, it goes right in line with what we already have with our spreadsheet. This is not like anything that's going to get you much closer or whatever. The spreadsheet numbers still going to help you in these places. But you're also looking at the chart here. There's support there. There's some support here, not necessarily as strong, but there's some at 41.40. So you can, jump in the middle, 41.35. You're looking at the time frames of the day though. So this is 3:45. That candle didn't meet the criteria. This would have been the 3:45 candle right here, and the open and close of it was 4 or 5, right? Not big enough to really meet the criteria, but you could also say maybe I just go with 41.35, which is underneath all of these. Let's see what the money looked like at 41.35. Currently, it's $15, $20. $15, $20 works. That'll work too. You're looking at the high of the day. Up here, high of the day is 41.60. That's a thought. I always have that thought in mind for me. Bye, Kendra. Okay, let's see. So the criteria wasn't met with the 15-minute chart, so we could then go down to the 10 minutes because we're past the 10-minute mark. We're past 3:50 now. This is something I think would be good to, if you're going to look at it, definitely to give it a few watches inside your sim. This is the 350 candle here. Nope, that's not the one I want. I want the 340 candle. The 340 candle is only two points, and the current ATR is 6.9. So this wouldn't meet the criteria either. But you still are up and above the 41, 40, or 35 if you were deciding you like that. 5 minutes. Many of us here are not daredevilish to that degree. Like, no, I don't know about that. But it's weird because even though it feels like it's so close in time, it almost gives you some comfort because you're like, on one hand, you can say how much could it do in 5 minutes? But if we do know SPX can be a lot in 5 minutes, and the time to do anything with it or about it isn't really there either. So that's the biggest thing too. There's not much defending you can do. Oh, long wick here. We're on the 5-minute chart now. This would have been the candle, which again isn't big enough to really meet the criteria either. We need at least a 4. The ATR is 4 and some change, and the open and close here is the same price, almost 45 cents. So if you were at 41.50, what did I say was the highest price of the day? 41.60, I said was the top of the day. If you have 41.50 or 60, you're there. Or if you were at this 41.35, you'd still be within the zone. Get in the zone. I'm switching us to Thursday to see what we would have done. Now, where this would have worked on the later 3:30 or 3:45 on a day like Thursday, which you can't see this coming until you're, of course, in it. But on a day like Thursday, is you would have seen the hard downward push and not gotten in the way, because I had strikes underneath, which is why, end up getting bit. I got in at 2:30. So I got in right here just before the mighty fall started. And then I went away to, run copies and all the other things that needed to be done, thinking that I had 4,100 and 40.95, thinking that I had some comfort because there was a support right here. I looked over here to see that this was a good support at 41.20, which had been support for a while. And 41.20, you can see over here, played long, good support on all these places over here. I thought, well, 41.20, surely it will stop around 41.20. And it danced around a little bit, but it didn't dance for long. Then it started moving some more. But then I, again, was away from my computer, which was another thing you ain't supposed to do when you fooling around with SPX, is be someplace else. Ain't supposed to be nowheres else. So let's go to the 15-minute candle. And see the 15-minute candles. Well, let me pause this here because this would have been this candle here, the one next to the last one, which the open and close for this candle, 41.01 and 40.97, was only about 3, almost 4, but the ATR is 8. So at 3:45, this would not have necessarily met the criteria, but because this is coming down like it is, you could have then said, okay, this is coming down pretty crazy, potentially do a CCS just because you can stay above it versus getting underneath it. Just the thoughts, just do the one side versus both. We don't have to I'm telling myself this, I don't have to always do iron condors. I can, or let's say you can do one side. You can do one side. You don't have to do both sides. Sometimes I get into the mindset that I must do the iron condor. But then this gave me pause, or would have even given me pause even in the trade, this candle right here, because it gave strong indication that it was now going to try to go the other direction. But the sellers were pushing hard. They were pushing hard, and they kept jump right on that next candle, still going down some more. This candle, the ATR is 6.7. Of course, we see that this one would not meet the criteria of that. Let's switch over to 5-minute chart, turn our candles back on. So it paused and it stair-stepped around the 4,100. Took a minute to say, maybe we can stop right here, which I had 4,100. So I'm sitting there going, well, maybe it'll go ahead and come on back up out of the zone. It did for just a hot minute, and then it didn't. What questions do we have? Questions, comments, inputs? None? All righty. Okay, let's switch back to wrap up. Oh, can't go there just yet till I share my screen again. No questions from me. I don't need to add a page. I don't need you here either. There we go. Okay, so we covered two things today. We covered selling covered calls and we covered the 345 strategy. So you can sell covered calls against your 100 share position or a long call. I didn't talk about selling against long calls. If you already have my covered calls course, we talk about it a lot in there. The what to do hasn't changed. It's just that one we were talking a lot more about leaps. It works on long calls. Either way, the information is still good information. You want to pick strikes above your cost basis. If you want to keep your shares, then pick a delta at 25 or less. If you're using covered calls for income, then pick one strike above your cost basis. You can close them whenever you like with a buy to close or a roll order, or you can just let them expire. All righty. Did anybody do cash secure puts from last week, either sim or live, and then let them expire? So you can see that you got the shares. Did anybody actually get shares, or did anybody in their sim get shares?
I bought the clothes.
Okay.
I lost money.
You were in your live?
No, sim.
Sim, okay. Well, why'd you buy the clothes?
Oh, just because.
Okay.
And then I went and bought it again.
Okay.
For 2 weeks out.
Okay, so you could have rolled it, which is really what you did was roll it. If you closed it and then bought it and then entered again, you just were rolling. You just did it in two motions instead of one.
Right.
Jamie?
Yes. What's up?
Tell us how your cash secure put things are going and how your week went. You didn't tell us that earlier.
How the week went as far as what? I got the breach, but I still ended up the week profitable. So that was great. The cash secure puts are, I don't want to say they're garbage, but let's just say I'm glad we got this joint out to the 17th of March.
Which ones did you get? Which ones did you get?
AMC, I think.
Actually, the AMC strike should be fine.
Hold on a second.
AMC, the price is at 5 cents some change, and we got the 4 strike.
Yeah. I got AMC. That's right. I got the 5 strike.
Oh, you got the 5 strike. Well, 5 strikes still ain't bad. It's just it's not showing a profit right now, but it's still a good trade.
Well, good and terrible right now if it ain't in no profit. I judge it by the profit it's in currently.
Oh well, no. I mean, but the price of AMC is at 5 and some change, right? And you have a 5 strike.
5 and I haven't looked at it. I mean, I can't see the number from the screen I'm on, but that sounds right.
Yeah, AMC is currently at $5.24.
Okay.
And if you have a 5 strike, as long as it's above your 5 strike, then that trade is still good.
True, but all I'm saying is it's a meme stock.
Okay.
So that's what I'm saying for right now. Okay, yeah, but this is one of the ones you want that to show green as often as you can.
Okay.
Before them jokers start putting the whatever kind of squeeze they call it on there, short squeeze and all this other stuff. So, but you're right. I'm not refuting what you're saying. But emotionally, I like to see green with this one.
Okay. What other ones do you have?
Just that.
Okay. So that trades good.
I was gonna do. I like Riot, but the covered call on those suck. So yeah, so it's like it's a good. It'll be good to have in terms of. It seems to fluctuate nicely, but you got to keep the covered call side of that. So we'll see.
Okay. What else do we have? Don't forget, I'm putting the link in the chat right now. Not the link in the chat, but I'm putting a graphic in the chat. We are still running our boot camp coming up. Boot camp is coming up March 1st and 2nd. A Options 411 boot camp is going to be coming up March 1st and the 2nd. I need to put the date on here. I don't have a date on this graphic. Even though all of us here know how to trade options, share it with your, ecosystems, your world, your people, your parts, so that way we can bring them into the world of trading, right? For every person who registers, it's $47. For every person who registers, you will get $17. Good way for you to make a few more dollars for you just by sharing our little area with other people, our Options 411 boot camp with other people. I had a guy send me a message and he inboxed me and he said he was sending over a friend of his. He was like, because his friend wants to learn options, but he said, you're a better teacher than I am. So there's some people who are, trying to teach their own ecosystems, which I think is good. You should know enough to teach others. But everybody's not meant to teach it. Just because you know how to do something doesn't mean you can teach it to somebody else. And if you can, then you should. But if you can't, you should send them off to somebody who can. So, mine's going to be $47. I've seen people do something very similar for a lot more money. And I don't know what they provided because I didn't sign up for it, except for what I did sign up for was $2,500. I did sign up for that. And it was fruitful. It gave me what I was supposed to get out of it. But I'd like to start people at this stage and this price point, so that way they can decide whether they really have the bones for this, because you don't want to find out after the $2,500 infusion of cash that this ain't your thing. You really need to find that out for a little bit cheaper price. Because some people, paid the money and got in like this was not for me, and the money's already spent. Okay, so I guess that part's neither here nor there. It's just that I would like people to be introduced to the world of options at a price point that is that they can work with from the beginning, and then go up from there. All righty. Comments, Miss Barbara. Agreed. So share and share alike. Tell the people around you all about it. I'd like for us to accept the challenge to bring in about 100 people into the boot camp. If we can get 100 folks in here into our boot camp, that means we're bringing, let's say if we keep half of them, we bring them into our ecosystem. That's us really generating, not necessarily just to bring people into our world, but to expand the minds of the people we're bringing in, to incorporate what the stock market can afford you. Okay, I'm really more focused on the teach a man to fish versus let me build a kingdom. But I think that I do know, and you all know, that there are benefits to being somebody who has an understanding of the stock market and how it can benefit you. So we want to share that with our world too, not just, of course people want to make the money, but I get it. But let's start them off with, get them on the path. Okay. Well, I think I'm finished. Oh, the market is closed on Monday. I'm not sure if y'all mentioned that on Friday, Jamie. Did you all talk about that? I didn't mention it in the morning.
We did not, because I totally forgot all about it.
Yeah. The market is closed on Monday because it's a holiday. It's President's Day. From what I understand, the market's closed. So, closed on Monday means we won't have a morning call or an afternoon call because we trade with the market. So we'll do it on Tuesday. All righty, you all. We will talk again in the chat. You all be careful, be safe, have a good rest of the weekend. Enjoy President's Day. Go buy a mattress. Not sure why they always sell mattresses on President's Day.
That's funny.
What's the connection there? I do not know why they always have a mattress sale on President's Day. But if you need a mattress, now will be the time, I guess, to go buy one. Okay. All right. I'll see y'all later.
I'll tell you, sir.
All right.
Have a good weekend. Bye-bye.
Bye-bye.